Joining us now on the investing environment, CalSTRS Chief Investment Officer Chris Ailman. Chris, welcome. Unlike CSX, I guess you were at least expecting a recession or a soft landing scenario that wouldn't feel good. You talked a few months ago here on CNBC about a possible 2 years of sideways 3 to 4% inflation, and so far it doesn't look like we're heading there. So what did you get wrong, and how does it shape your plan from here?
Well, John, it's a challenging environment, just like the board behind you. It's very mixed, 50-50, and trying to figure out, are we having a soft landing or are we actually going to have a recession? All the economists are still predicting that recession, yet, as Rick Santoli said, the market's climbing that wall of worry. So last year was a challenge because we were a bit defensive, but the market had really strong double-digit returns. We came close to that 7% target, just didn't quite hit it, but we're going to be somewhere in the 6% range, which is okay for last year, but not what I want.
So do you stick to the same playbook, just figuring, okay, now it's right, now that we've had this huge run in equities? Do you tilt toward utilities, energy, healthcare, areas like that haven't performed as well? What?
Well, you see days like today where the market at least is positive. It's on an amazing streak. But the chart Rick Santoli showed about how the fact that we're climbing up the same kind of place we were back in 2022 makes you want to pause. And we'll see how the fall goes. There are still a lot of forecasts. The Fed will probably pause after next week, but what is inflation going to be through the rest of the summer? What's the job market? I still put it at a 50-50 chance of a small recession, which is not good for earnings. Yet next week's earnings will be critical, and then we'll have the third quarter earnings reports to look forward to. So it's a year where it really is a mixed future, and it's tough to call and tough to be aggressive, even though the market's being strong.
I mean, we do have interest rates higher. That's translating into fixed income right now, too. It does seem like there's this moment for private credit that hasn't existed for quite some time. How are you thinking about that?
We like private credit, Morgan. We think it's an interesting area to be into, but you've got to do your due diligence and know your credits, because if we come into a bit of a recession, that's where you're going to see a real big difference in the quality of those underlying credits. But you can get a nice yield to maturity. And fixed income is attractive. We're actually slowly increasing our allocation to fixed income. After 30 years of dropping it, we're now moving it back up a little bit.
Yeah, I mean, in terms of public equities that you've held and that we've spoken to over the years, I mean, we were just talking to the president of Meta. There's obviously a lot of fervor in the market right now around AI and those future capabilities and how some of these big companies are going to monetize them. How are you thinking about that and those tech holdings that you do have?
The Magnificent Seven and the fact that they've gone up so dramatically is not healthy for the market. I worry about the breadth of the market, Morgan, because I own the entire market in its proper weightings. So the fact that those are so strong does make me pause. I'm glad to see the Russell 2000 come back, small cap stocks come back a little bit. So improvement in the breadth this summer would help me be a bit more comfortable about the market. But we've seen this before where the market has performed and a very narrow group of stocks at the top have done well. Mm-hmm. Those companies are phenomenal. They are producing earnings, and that's a big difference from past bubbles.
Okay, so given that, outside of those big seven, what's the most pivotal earnings report next week that you're watching to get a sense of where we might be headed for the rest of the year?
Well, I want to know what the Twitter account said, but I would say it's going to be interesting. I'd still going to look at Microsoft as really part of the key. And as CSX, the president said, the base economy is quite strong and the consumer is quite strong. To me, that's baffling, given rates have gone up 500 points. You've got to think there'd be a bigger slowdown in the housing market, more pain in the real estate market, yet we're muddling through, John. So I think those base earnings on the consumer are critical, as well as continuing to see the Magnificent Seven perform well.